Right now as you're watching this video, Ray Dalio, the man who predicted the 2008 crash 6 years before it happened, is making 3 specific moves with his money that he's never made before in his 50-year career. Not one move, not 2, 3 simultaneous bets that he says will either make you wealthy or leave you completely broke by 2028. And here's what should terrify you. He's not whispering about this in private hedge fund meetings. He's screaming it from the rooftops. He wrote a 400-page book and gave it away for free because he's that desperate for people to understand what's coming. Listen to what he said in March. We're entering the most dangerous economic period in 100 years. Not since the 1930s has the world faced this combination of forces. The man who manages $160 billion, the man who made money while everyone else drowned in 2008, that man just said we're entering a period more dangerous than the Great Depression. But here's what nobody's talking about. He's not just warning you. He's showing you his exact playbook. 3 specific assets he's moving billions into right now. And if you don't understand why he's buying these 3 things, you're about to watch your wealth evaporate over the next 36 months, while a small group of people who listen become generationally wealthy. Stay with me, because in the next 12 minutes I'm going to show you something that might save everything you've ever worked for. Before we go any further, you need to understand who Ray Dalio is, because this isn't some YouTube guru making predictions. This is the man who literally wrote the book Economic Cycles. 1975, Dalio starts Bridgewater Associates from his 2-bedroom apartment. 48 years later, it's the largest hedge fund in the world. $160 billion under management. But here's what separates him from every other billionaire. His track record is insane. From 1991 to 2020, Bridgewater returned 12% annually after fees, while the S&P 500 returned 10%. You might think that's only 2% better. But here's the kicker: he did it with half the volatility, half the risk, double the risk-adjusted return. That's not luck. That's understanding something nobody else understands. And what he understood in 2002, 6 years before anyone else, was that the housing market was about to explode. He wrote a research paper in 2002 explaining exactly how subprime mortgages would default, how the contagion would spread to banks, how the Fed would print money, how gold would skyrocket. He laid out the entire 2008 playbook. In 2002, when the market crashed 57%, in 2008, Bridgewater made 14% positive returns while everyone else was getting annihilated. Now fast forward to 2024. This same man, who's been right about every major crisis for 50 years, just said something that should make your blood run cold. The next 3 to 5 years will be more dangerous than anything I've seen in my lifetime. And I'm positioned accordingly. He's not just warning you. He's showing you his positions. 3 specific assets. And you need to know what they are and why he's buying them. Because once you understand the why, you'll understand what's about to happen to your money, your job, your retirement, and this entire economy. Here's what Dalio discovered that changed everything. He studied every major empire collapse over the last 500 years. Dutch Empire, British Empire, Roman Empire. He found something absolutely terrifying. They all collapsed following the exact same pattern. Not similar patterns. The exact same sequence. Stage 1, massive debt accumulation. Stage 2, currency debasement. Stage 3, internal political division. Stage 4, external geopolitical conflict. Stage 5, the collapse. And here's what's keeping him up at night. All 5 stages are happening in America right now, simultaneously. Let me show you. Stage 1, debt. The US owes $36 trillion. That's 132% of GDP. We're paying $1.2 trillion in interest annually. That's more than we spend on defense. By 2027, it'll be $1.8 trillion. But wait, there's more. And it gets worse. Stage 2, currency collapse. To pay that debt, the government has 2 choices: default or print money. They'll print. But when you print money, the dollar becomes toilet paper. Every dollar you've saved loses value. Stage 3, internal division. Wealth inequality is at 1929 levels. The top 1% owns 40% of everything. The bottom 50%? They own 2%. When the gap gets this wide, societies don't just crack, they explode. Stage 4, external conflict. US and China are in a Cold War. Trade restrictions, technology bans, military tension over Taiwan. This is exactly what happened before World War II between the US and Japan. Stage 5, the collapse. This is where we're headed between 2025 and 2028 unless you position yourself correctly. Now here's what makes Dalio different from every other doom and gloom predictor. He's not telling you to panic. He's telling you exactly what to buy. 3 specific assets that have survived every empire collapse in history. And he's putting his money, billions of dollars, into these exact three things right now. Let me show you what they are. Asset number one is gold, not gold stocks, not gold ETFs, physical gold that you own and control. And before you roll your eyes thinking, oh great, another gold bug, listen to this. Dalio wrote a research piece in 2019 called, Why in the World Would You Own Bonds When? He explained that bonds are trash. Governments will print money. Bonds will get repaid in devalued currency. Real returns will be negative, and the only real store of value is gold. Since then, Bridgewater has allocated $8 to $16 billion to gold positions, and Dalio personally owns gold. He said every investor should have 5-10% in gold as insurance. Now here's why this matters to you. When you own a bond, you're dependent on the government paying you back. If they print money, you lose. When you own a stock, you're dependent on the company performing. If the company fails, you lose. When you own gold, you're dependent on nothing. Gold is an element. It cannot be created or destroyed. It has value, because humans have assigned it value for 5,000 years, and it will have value after currencies collapse, because it's the only money that survives every collapse. Don't believe me? Look at history. Weimar Germany, 1920s. The German mark went to zero. Hyperinflation destroyed everyone's savings. But the people who held gold? They survived. They rebuilt their wealth. Argentina, 2001, the peso collapsed. Bank accounts were frozen. People who held pesos lost everything. People who held gold preserved their wealth. Venezuela right now, the bolivar is worthless. You need a wheelbarrow of cash to buy groceries. But people with gold, they can still eat. This isn't theory. This is 5,000 years of evidence screaming at you. And Dalio expects gold to go from $2,700 today to $5,000 to $10,000 by 2030. Not because gold is becoming more valuable, because the dollar is becoming less valuable. When the U.S. faces the debt crisis, when interest payments exceed what they can collect in taxes, they will print trillions. The money supply will explode. Inflation will hit 20 to 30% annually, and gold will rise to reflect the devaluation. This is exactly what happened from 1970 to 1980. Gold went from $35 to $850. A 24 times increase in 9 years. Dalio expects the same thing now. Except this time, the debt is bare. The printing will be bare, and gold will go higher. But here's what you need to understand. You can't wait until gold hits $4,000 to buy it. By then, it's too late. You buy gold now at $2,700 while everyone still thinks dollars are safe. That's asset number one. But it gets even more interesting. Asset number two is going to shock you. China and emerging markets. I can already hear you screaming, China? Are you insane? Everyone says China is collapsing. Real estate crisis, youth unemployment, economic slowdown, the enemy. And you're right. Everyone is saying that. Which is exactly why Dalio is buying heavily. Bridgewater has 20% of its portfolio in Chinese stocks and bonds. That's $30 billion in China exposure. And he's defended this positioning, despite massive criticism from American politicians and media. Here's why he's doing it. Dalio doesn't invest based on politics or media narratives. He invests based on cycles, and he knows the U.S. is in decline, while China is rising. Not because China is better, but because that's how the cycle works. Every dominant empire eventually declines, and a new empire rises to replace it. The Dutch dominated the 1600s, then declined. The British dominated the 1800s, then declined. The Americans dominated the 1900s, and now we're declining. And China is rising. Look at the facts, not the propaganda. Debt. U.S. has 132% debt to GDP. China has 77%. Savings. U.S. has a negative savings rate. China has a 35% savings rate. Infrastructure. U.S. has crumbling roads and bridges. China built high-speed rail across the entire country in 15 years. Political system. U.S. has gridlock. Nothing gets done. China has centralized decision-making that can mobilize resources instantly. Now, does this mean China doesn't have problems? No. China has massive problems. Real estate bubble. Demographic decline. Authoritarian government that stifles innovation. Dalio acknowledges all of this. But he also knows something critical. When a reserve currency collapses, capital flows somewhere. When the British pound collapsed after World War II, capital flowed to the US dollar. When the US dollar collapses, and it will, capital will flow somewhere. The euro is collapsing faster than the dollar. Japan has 260% debt to GDP, worse than anyone. That leaves China. And despite all its problems, China has the manufacturing base, the population, the savings, the gold reserves to potentially become the next reserve currency. Maybe not tomorrow. Maybe not this decade. But over the next 20 to 30 years, as the US declines, China rises. And Dalio is positioning for that shift now, while Chinese stocks are cheap. This is not a political statement. This is portfolio positioning for the changing world order. You don't have to like it. You just have to understand the cycle. But there's one more asset that ties this all together. Asset number 3 is inflation-protected assets. This includes Treasury inflation-protected securities, TIPS, real estate commodities, anything that holds value well. Currency devalues. Dalio has 15% of Bridgewater's portfolio in inflation-linked bonds and commodity exposure. Here's why this is critical. When the government prints money to solve the debt crisis, inflation spikes, not the 2% target inflation the Fed talks about. Real inflation. 10 to 20% annually. Food prices double, energy prices triple, housing costs explode. Your dollar buy half of what they bought 2 years ago. If you're holding cash, you're destroyed. If you're holding regular bonds, you're destroyed. But if you're holding TIPS, you're protected. TIPS adjust for inflation. If inflation is 15%, your bond pays 15% more. You maintain purchasing power. Real estate works the same way. If inflation is 20%, rents go up 20%. Property values go up 20%. Your real wealth is preserved. Commodities too. Oil, wheat, copper, they all rise with inflation because they're priced in dollars. When dollars become worthless, you need more dollars to buy the same barrel of oil. Dalio studied every inflationary period in history. 1970s US inflation, Weimar Germany, Argentina, Zimbabwe. The pattern is always the same. Financial assets denominated in currency get destroyed. Real assets hold value. Stocks fall in real terms even if they rise nominally. Bonds get crushed, but commodities, real estate, gold, they preserve wealth. This is why Dalio holds inflation-protected assets. Not to get rich, to not get poor when the currency collapses. Now let me show you the timeline. Dalio is very specific about when this unfolds. He said the crisis period is 2023 to 2028. 5 years, we're 2 years in. 3 years left. Here's how it breaks down. Fourth quarter 2024. Right now, final setup phase. Markets might make new highs. People think everything is fine. But underneath, credit is tightening. Debt is unsustainable. This is your last chance to position. First quarter to second quarter 2025. Next 6 months. The cracks appear. Recession begins. Unemployment rises. Corporate earnings disappoint. Stock market volatility increases. First signs of crisis. Third quarter 2025. July-September. Full crisis mode. Stock market down 25%. Fed cuts rates to 0. Launches new QE. Prints $2 to $3 trillion. Inflation starts coming back. 2026. The inflation phase. The printed money hits the economy. Inflation goes from 3% to 10% to 20%. Gold starts its run to $5,000. Stocks rise nominally but fall in real terms. Bonds are crushed. 2027 to 2028. The reset. New monetary system. Maybe partially gold-backed. Maybe digital currency. Standard of living is lower for most people. But the crisis has stabilized. This is the timeline. This is the playbook. And it's based on studying every empire collapse over 500 years. The pattern doesn't change. The timeline doesn't change. The only question is, will you position yourself correctly? Here's exactly what to do right now. Step 1. Gold allocation. Target. 10 to 15% of your portfolio, not gold stocks. Not gold ETFs unless you can't access physical gold coins or bars stored securely. If you have $100,000 in net worth, put $10 to $15,000 in gold. If you have $1 million, put $100 to $150,000 in gold. This is your insurance against currency collapse. Buy it now while it's $2,700 before it goes to $5,000 plus. Step 2. China, emerging markets target. 10 to 20% depending on risk tolerance. You can buy emerging market ETFs, funds that hold Chinese, Indian, Brazilian stocks, markets that benefit from the shift away from US dollar dominance. If you have $100,000, put $10 to $20,000 in emerging market funds. Focus on funds with heavy China weighting. Step 3. Inflation protected assets target. 15 to 25% buy TIPS through Treasury Direct or TIPS ETFs. Consider real estate if you can afford it. Commodity exposure through ETFs. Total, 35 to 60% of your portfolio in these 3 categories. The remaining 40 to 65%. Cash, 6 months expenses, short-term Treasury bills. Earning 5%. High-quality stocks with pricing power. This is the Dalio-inspired allocation. When the dollar collapses, gold saves you. When the US declines, China exposure saves you. When inflation spikes, tips and real assets save you. This is not a get-rich portfolio. This is a preserve wealth portfolio, because in the coming crisis, preserving wealth is the priority. Getting rich comes later, when you deploy your preserved capital into crashed assets. Listen carefully, you have 3 to 6 months to position. After that, the crisis begins, and by the time it's obvious to everyone, it's too late. Gold will already be at $4,000. Emerging markets will have already adjusted. Inflation will already be spiking. The opportunity is now, while everyone thinks everything is fine. While markets are at all-time highs. While the media says the economy is strong. That's when you position, not when the crisis hits, but before it hits. Because once it starts, you can't get out. You're trapped in devaluing dollars, trapped in collapsing bonds, trapped in nominal gains that are real losses. Ray Dalio is 75 years old. He's been investing for 50 years. He's seen every crisis since the 1970s, and he's telling you, the biggest storm in 100 years is coming. 3 forces converging. Debt crisis, geopolitical conflict, internal division. The same forces that destroyed the Roman Empire, the British Empire, every empire in history. And he's showing you exactly what to do. Buy gold, buy China, and emerging markets, buy inflation-protected assets. This is not fear-mongering. This is the pattern. And the pattern is undeniable. If this opened your eyes, subscribe right now. Over the next 18 months, I'll track Dalio's positioning, his public statement, the indicators he watches, the timeline to crisis. You need to see this in real time. Hit that subscribe button, hit the bell, because the storm is coming. And the only question is, will you be ready? The choice is yours.